Real estate market update, Fed cuts rates but mortgage rates jump higher. The Federal Reserve followed through on expectations today, cutting interest rates by 0.25%, lowering the benchmark rate to a range of 3.75% to 4%. However, what happened next caught many by surprise. Mortgage rates actually moved higher immediately after the announcement. The paradox, why mortgage rates rose after a Fed cut. Many assume that when the Fed cuts rates, mortgage rates automatically fall, but that's not how the system works. Mortgage rates react to market expectations for future rates, not the cut itself. During today's press conference, Fed Chair Jerome Powell signaled that another rate cut in December is not guaranteed. That comment ran against market expectations and sent bond yields higher, which directly pushed mortgage rates up at the fastest pace since the last Fed meeting. In short, the Fed cut short-term rates, but long-term rates, including mortgages, spiked because investors expect the Fed to pause sooner than expected. What this means for Park County buyers, even with this short-term bump, rates are still lower than they've been for most of the year, roughly back to mid-October levels. For buyers, this means don't panic. The increase may be temporary, and volatility often settles within days. Stay in close contact with your lender. If you see a dip, be ready to lock fast. Buyers using cash or seller-financed options, common here in Park County, are largely insulated from these rate swings, giving them more leverage right now. What this means for sellers. For sellers, today's news may briefly slow momentum as buyers recalibrate financing. However, the broader trend toward lower rates is still intact. Inventory across Park County remains well above average, so motivated sellers still have the advantage if they price ahead of the curve. With winter approaching, expect more activity from serious buyers, especially those looking to close before the holidays or ski season. The bigger picture. The Fed is walking a fine line, balancing a cooling job market with inflation that remains around 3%. Even as they cut rates to stimulate growth, Powell's cautious tone reminded markets that inflation control still comes first. Meanwhile, stocks continue to hover at record highs, the Dow above 47,000, showing confidence that the economy remains resilient despite mixed signals. Bottom line. Even with today's jump in mortgage rates, the direction of travel is still gradually downward. In the coming weeks, buyers should be ready to move when a brief rate dip appears. Sellers should position their listings now before the next wave of buyers returns when the rates settle. As always, we'll keep you updated on how these national changes affect our Park County mountain market, where timing, strategy,